Hey there, this is Okan. Today is 17th of April. Today is a day after a very major spike in the Bitcoin price that we see some sort of a stabilization around $8,000 and on the euro around 6,500. So while everyone is happy, I just want to make a very short video, and pretty much my first video, and that's basically voice only, that talks about some network activity that just doesn't vibe well with the price. So let's look at several stats. First of all, if you look at the average block size over the last 2 years, and all these charts are from blockchain.info, and 2-year charts with 7-day averages. So here what you see is that the average block size is just around 0.75 megabytes. So it's below 1 megabyte, which it has seen very rarely around the December period only of the last year. But if you look at the last 2 years, it has been around 0.85 megabytes, and recently it has fallen nearly to 0.65. The last couple of days, with the price rising, the block size also increased. But if you look at the average, we're sort of at the lower end of the 2-year period. When we look at the number of unique addresses used, a similar picture emerges. So 2 years ago, this is around 370,000, and during 2017 this has hovered around 500,000, with the December high hitting 850,000, and after the December high the fall extended to around 360, and now the figure is around 400. So the number of unique addresses has been the same over 2 years. This is the estimated transaction value by blockchain.info, and this is in bitcoins. So if you look at this figure, this is at a 2-year low. We're at around 130,000, 140,000 bitcoins per day. This has been sort of a 250,000 average for the last 2 years. After the fall of December last year, it has been halved in this number. If you look at the market capitalization over the same 2 years, 2 years ago the market cap of Bitcoin was $6.5 billion. Now the figure is 115. So while the network activity figures have stalled or fallen, the market cap or the network value has increased by around 18 times. The price has increased less than that, from $1,200 to $8,000, and the rest of the increase in network value comes from the number of coins, the increase in the number of coins. And similarly, another thing that has increased tremendously, even more than the price, has been the hash rate, that has increased by 19 to 20 times from 2 years ago. To sum this up, what we have is a market value, a network value, that's nearly 20 times high, price that's 8 times high, but usage figures that are pretty much stable. So under normal circumstances, if the usage of Bitcoin has not changed dramatically, why has the price changed that much? I mean, this money in circulation or risk appetite, all these explanations can have a role in this. But I'd offer an alternative. With all the other helping factors aside, I'd say the main factor is that there has been a new breed of investors that probably entered the market somewhere in 2017, culminating in the big increase towards the end of the year. And most of these investors, most of these new holders of Bitcoin, are not here to use the Bitcoin, but to hold on to it for either a store of value or price appreciation targets. So what we have is a disconnect between activity and price. This could mean a tremendous potential rally that could even surpass the market cap of December 2017, or this could be a sort of a fool's game in which everyone is waiting for the greater fool to buy in, and eventually the price might collapse to a level that is more compatible with the network activity. Or both of them can happen over a time period, first increase then fall, or first a fall and then an increase. My point is, everyone should pay attention to the problem of the network activity and price disconnect, or the issue of network activity and price disconnect. Whether this will have a major impact on prices or not is for time to tell. Thank you for listening in and looking at the graphs, and goodbye.